Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, we got an M&A trade here today, which I think hits near and dear to a lot of folks that are, particularly if you're 7-Eleven fans. I'm a Wawa guy myself.
Crystal covered that story as well this morning. I mean, 7-Eleven has the Icy, which I like, versus the Slurpee.
What's the Slurpee?
The Slurpee is, I think, grainier.
Okay.
You know, the Icy is a lot smoother.
Yep.
And I'm a bigger fan of the Icy. Had one last night on my drive home from the great state of Ohio.
You were in Ohio?
Yeah.
What'd you drive?
I drove back in my Dodge Challenger RT Scat Pack wide body.
On I-80?
Yeah. That's a good cruiser.
Yeah, exactly. Diana Rosero Pena joins us here in our studio. She's a Bloomberg Intelligence consumer staples analyst. Who is Couche-Tard, and why are they buying 7-Eleven for $31 billion?
Well, Couche-Tard is the second largest convenience store in the United States. They manage Circle K. Yes.
Okay. But they're Canadian, and that's why they have a French name that sounds funny to American ears.
Yes. It took me actually a while to be able to pronounce their name. But yeah, so they're very acquisitive. We're not that surprised that they are, you know, there's talks that they want to buy something, but 7-Eleven is actually a big name. Yeah. There's valuations going from like $50 billion to as much as like $85 billion. So for them to be able to do that, it's quite impressive if they are able to.
It's always surprising, I think, to people who aren't in the know that 7-Eleven is owned by a Japanese holding company. And I think they own Speedway as well. These seem like such American brands. Yep. So does Circle K, and it's owned by a Canadian company. Is there going to be antitrust issues here?
Well, for sure. The FTC, I mean, ask Kroger. They have been trying to purchase Albertsons for a couple of years now. So if they actually come up with the numbers and there's acceptance, I'm sure the FTC will have something to say. 7-Eleven has like about 14% of market share in the United States, whereas Couche-Tard with their Circle K brand, they have about 5%. So it definitely will be, you know, up for.
Again, I'm a Wawa guy, but. You know, I can see.
Is Wawa just like a New Jersey thing?
No, but it is. What is it?
It's in the Northeast. There's mostly in the Northeast. So, but yeah,
Explain to me this convenience store business. What's the economics of a convenience store? I just see people going in and out all the time. What's the economics?
Well, basically, they want you to go in for your gas. They're very competitive in gas prices. Fuel margins have been improving in the past few years. Couche-Tard actually has about 40 cents per gallon in terms of fuel margins. But what they're making money on is when you go into the store, particularly if you buy their sandwiches, the margins for that is like 50%.
It's true. By the way, I was filling up on the way there and back for more than $4.50 a gallon.
Oh, because you're putting in the super duper high.
I go with 93.
Yep.
And then I go in and I pick up a Snickers bar for my kid brother, and I got, I don't know, like a Twix. Each of those candy bars was more than $2.50.
Nice. Margin there.
And I'm starting to feel like a really old man, you know, because when I was a kid, 50 cents is what you paid for these things.
So are these good businesses? I mean,
yeah, if they're buying, I'm sure, you know, they think that there's some good business. I mean, Couche-Tard has usually, they do big acquisitions. The last acquisition that they did was for $11 billion for the Total Energies in Europe. But they usually, in the U.S., they usually buy smaller operators. For example, also this morning they announced that they bought GetGo from Giant Eagle. So that's another convenience store, which is in the,
with a delicious pulled pork sandwich, by the way.
Oh well, I actually haven't tried it.
Yeah, I had one this weekend. Yeah.
Where's GetGo?
I had them in Pennsylvania.
Virginia. Yeah, it's regional. Yeah.
Okay. All right, it's the Midwest. It's part of the world I don't go to.
I skipped what's the one you like? The Cracker Barrel.
Cracker Barrel.
I declined.
But you probably drove past like 100 of them on
yes, a lot of them. And I used to always stop because you get books on tape
at
1, and then you'd return it at the next. But you no longer.
What else are we seeing in your space, Diana, in the retail space? What are some of the key things people are looking at? 'Cause you cover a lot of retail.
Yeah, I mean, obviously, this is like the biggest thing that has happened today.
It's one of the biggest deals of the year, right?
Well, yeah, even
$31
Kroger,
billion puts it like number 2.
Yeah, I mean, obviously, the Kroger Albertsons acquisition is also the talk of the town. There's like likelihood that it might not happen. The FTC might object. So
when are we going to hear about that deal? Because we've been talking about Kroger's and Albertsons for a long time.
Yeah, honestly, like it really depends on what happens with the election and how M&A friendly the FTC will be afterwards.
All right. Well, 7-Eleven, by the numbers, and this is according to Bloomberg reporting, 85,000 stores. That's huge, and they've got 157,000 employees. So that's a big business.
Yeah.
And Couche-Tard Couche-Tard's got a bigger valuation, $58 billion valuation versus 38 for the 7-Eleven. So much higher valuation using that stock and cash, I guess, to get bigger.
Yeah, I think, definitely. I mean, obviously, I see this as an Asia play, to be honest with you.
Which we've seen more and more and more of, right? I mean,
Yes.
if you look at activist investors involved in Japanese stocks, for example, it goes from 15 in 2022 to 25 last year to 28 so far this year, and we're only in the first half.
Yeah.
Good stuff.
I mean, 7-Eleven has like 31% of the Asia Pacific market share.
Oh,
so,
okay. There you
yeah.
go. Now we're talking. All
Now
right.
we're talking.
Diana, thank you so much for joining us. Diana Rosero Pena, another one I hired back in the day. She's blossomed into this great analyst. Very cool to see. Consumer staples analyst, Bloomberg Intelligence, joining us in the Bloomberg Interactive Broker Studio, not mailing it in from like Nantucket or Deer Valley, or wherever they are.
Me and Paul
like
do not
senior
support
management.
work from home.
Yeah, so BI management, we know what's going on.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, our good friend Carl Icahn in the news, but I don't think for reasons he wants to be. Crystal C joins us, Bloomberg US Deals Reporter. Crystal, what's going on with our good friend Carl Icahn? He had some issues with the SEC, I think.
Yeah, I think he's probably quite glad about today's news. This is like coming to an end, something that's hung over his head and its firms for a while. Today's news is that his firm and him are settling a charge with the SEC and paying a fine of $2 million combined. And that is an investigation on the back of the Hindenburg research report from 2023, saying that they've inflated some of their asset values and quote unquote operate like a Ponzi scheme. So this is actually in some way good news, even though the stock doesn't quite reflect that today.
Yeah, no, the stock took a hit, I think it was last year in May, when we first learned about these investigations and short sellers started questioning what Carl Icahn's loans were really based on. Does this wrap it up? Is this the end of it?
It looks like the end of it. So there are two investigations. If you remember, this one is the SEC investigation and settlement. The other one, they had previously disclosed that they were contacted by the U.S. Attorney's Office. And today they put out a statement, IEP and Icahn put out a statement saying that they haven't received any substantive communication from the U.S. Attorney's Office since the initial approach. So I guess you can take it as a good sign. No news is sometimes good news. Not for us reporter, but for an investment firm like them,
this was a $50 company, $50 plus, and now it's a $15 company.
Yeah, so what's
right, and shares are down today as well.
All right, I'm just looking at the stock here, as Matt said. It's down 7% today, down about 8% year to date, and down 30% over the trailing 12 months. So not a great move there. Crystal, thanks so much for joining us. Crystal C, just giving us the update there. Carl Icahn settling what is for him, I'm sure, a very small number, a couple $1 million to settle some issues with the SEC.
IEP.
Carl Icahn's 88 years old.
Icahn, he's in good shape for 88. That is still a very sharp guy.
Yep.
His company, this is a diversified holding company.
Right.
They hold automotive investments, energy,
Yep.
gaming, rail car,
right.
food packaging, markets,
exactly.
real estate, metals,
Yep.
home fashion.
Market cap, $7.5 billion.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Matthew Miller sitting in for Alex Steele today in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well, so head over to youtube.com and search Bloomberg Podcast, and that's where you will find us. Green on the screen today. Boy, that 2 weeks ago today, when we had that big sell-off and that VIX
Monday
jumping above 60. You know, we got the VIX back down
15.
below 15. It's just amazing the round trip we've had. So I don't know what to make of it, but I think our next guest might. Carl Schleif, Chief Investment Officer at BMO Family Office, joins us via that Zoom thing. Carol, what's your opinion on what we've seen over the past couple of weeks? Again, starting with 2 weeks ago today when we had that panic sell-off.
Yeah, it's not necessarily unusual for August to be exceedingly volatile. You've got a lot of senior people on the beach, and it can very frequently lead to some choppy trading like we saw. It was a little eye-popping back then, but having lived through the 1987 issue, which was October, but still did a Friday to Monday. If that Monday had been similar, it would have been down 9,000 points on the Dow, not just a mere 1,000.
That's great.
So, but it's not unusual at all to see that kind of volatility. I actually would have expected it to happen, to follow through for a few days, and I wouldn't write off that we're done seeing volatility, especially if we get into Friday and people don't like what Powell says in the speech, and or we're just in between earnings now. We're off a good earnings season. We don't have much going until the Fed meets again after this week in September. So,
well, we get continuing claims out before that, and it seems like every little data point has become a big event for markets with, I guess, low volume. That's going to happen. But what could Powell say that would disappoint?
If he pushed off the likelihood of a September cut, because I think most of the expectations are you'll see a cut in September. The question is just how much. 25 basis points, 50 basis points. Will he be able to structure commentary that actually Fed policy currently is very restrictive given where the economic data is coming in? And yes, the Fed has made us all very data dependent and data watchers on every single point trying to figure out which way the Fed's going to go. But there is a rationale and an ability for the Fed to be able to say, hey, our policy is restrictive. We could actually chunk it down a time or two, and it wouldn't be indicative of a softening economy. You've also got some retail numbers coming out this week, which people will be watching closely. You had the biggest retailer report last week, and you've also got NVIDIA coming out, and if people don't like that they haven't knocked it out of the park over and above where the expectations are, you could see that volatility in the markets in the short run.
All right, Carol, we've done this round trip over the past couple of weeks. What do I do now in the equity markets?
Well, I think you stay invested. Hopefully you were invested through all of that and sat tight. We were advising clients. The interesting thing is if you had a diversified portfolio, even on that Friday and Monday that were very volatile, your bonds did well because the rates came down, so the bond prices went up. So you had that durability built into the portfolio. You also look more broadly at things that should benefit if the Fed does start to cut rates. Small cap should benefit, mid cap should benefit. Lots of different industries here in the US should continue to benefit. And we do suspect that once those rates come down, you'll see consumers continue to spend because they're employed. You'll see businesses, we suspect, spend more than is expected right now. And maybe the biggest surprise out there is how low that 10-year yield is, because we suspect it'll drift higher over the intermediate and longer term.
All right, so once the Fed, I guess we're all on the same page that they are going to cut, and by 25 basis points. Do they continue to do that, Carol? Because we're growing still at 2.5+%, and unemployment, although it ticked up, is still only 4.3%, which is very low. Inflation is also well under 3% now, which is back to, less than even its historical average. So, does the Fed really need to be moving interest rates around? Why don't they just hold tight so that they have more powder left if something bad happens?
They still have an incredible amount of powder. If you think through that, for 10 to 15 years, they had basically no powder because they were 0 to 0.5%. They're at 5.25, 5.3% right now. And so they've got substantial policy room and still leaving policy room. Even if they brought it down 100 basis points over the next 6 months or so, you still got room in there to be able to cut if things really did tail off. And the last thing they want to do is be caught behind the curve too, especially on that employment market, because you've seen the momentum tick up there. And granted, it's from people coming into the market. But one question you have for yourself is, are they coming into the market because of they're being pinched by inflation and really feel a need?
Carol, I know in your notes here, you've got industrials and materials as a couple sectors you're looking at. That's not very exciting. Why are you guys looking at that?
Well, the thing of it is, you look at the charts on some of those industrials and materials, and the charts actually look a lot like NVIDIA's chart does in terms of there's a lot of fiscal stimulus or a lot of fiscal spending plans still in the works. Much of that money has been allocated, but not necessarily spent. And a lot of that's not necessarily going to be pulled back. And the reindustrialization, the bringing manufacturing back to the United States, a lot of those plans are in process. They had to work through local permitting, and we don't think they're going to be turned back. You've also got infrastructure spend. So there's a lot of reasons to think through that. But you've also got the notion where if you go back and look over the last 20 or 30 years, the industrial component of the S&P has shrunk. And given the attention and the spending we're focusing on that sector or those sectors, we expect you'll see them expand, and perhaps as a percentage of the S&P as well as the leadership shifts to a more broad group of participating industries.
Carol, when you look at your portfolio, do you need to change anything if Donald Trump wins this election?
We're feeling pretty comfortable about where the portfolios are, and a lot of it would depend on if Mr. Trump wins the election and what does the composition of House and Senate look like. So there's a big piece of that, and we typically have always advised people not necessarily to trade on potential who wins, who doesn't. You know, the theory had been, for example, that energy stocks should do better under Trump presidency than a Biden presidency, but the opposite proved to be the fact. So building sturdy portfolios for intermediate and long-term investment always is the wise, and being able to adjust or tweak at the margins after we see what the outcome is. There we might make some adjustments, but most likely not, because we tend to build really sturdy portfolios and think the economy is going to do quite well under either president.
All right, Carol, thank you so much for joining us. As always, Carol Schleif, Chief Investment Officer for BMO Family Office.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We've got Matthew Miller sitting in for Alex Steele here. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube, so head over to youtube.com. Search Bloomberg Podcast, and that's where you will find us. Matt, you want to talk about EVs?
I would love to, yeah.
Okay, it's great timing that you're here, because today we're going to talk a little bit about EVs with our good friend Corey Cantor. He's a lead U.S. electric vehicle analyst. Yes, there is such a thing at Bloomberg New Energy Finance. They prefer BNEF. I don't care. He joins us here in our Bloomberg Interactive Broker studio. Corey, give us a state of the market these days about where we are in this long evolution from internal combustion engines to getting to an all-electric world. Where kind of are we on that spectrum today?
Yeah, we're in 2024. We're in a bit of, I'd say, a bumpy moment, a bumpy first half of the year. If we step back and look at 2023 compared to 2022, you saw in the U.S. about 50% year-on-year growth for electric vehicles in the U.S. First half of this year, you're looking more at that kind of 10 to 15%, depending on where you get your numbers.
We were 50% growth last year, and we're 15% this year?
So, Matt, basically, if you take out the largest automaker, Tesla, which has had a very difficult first half of this year, you're still seeing amongst the automakers, your Hyundai, your Ford, 30, 40% year-on-year growth, more in the trajectory of what we saw last year. but Tesla's stagnation and kind of, I'd say, aging lineup has brought down that U.S. average more to that kind of 10 to 20%.
Well, and Elon Musk's pandering love for Donald Trump. Did you listen to that interview the other day? I think interview is the wrong word. Did you listen to that conversation? I mean, it was pretty crazy. Trump was like, you can make great cars, but we don't all need electric vehicles. And Musk didn't even really go up against him.
I saw some clips from the conversation. I think less of the overall listening on. I'm on Twitter maybe too much, but more for sports and less for Spaces. With Tesla in particular, there's been some challenges in California, as Bloomberg News' own Dana Hull has covered. You've seen quarter-on-quarter reduction of overall sales compared to the previous year. So Tesla may have a California problem. Actually, my sister just got a Tesla Model Y, which continues to be the best-selling vehicle amongst EVs.
Ed Ludlow just got one, the co-host of Bloomberg Technology. I mean, Marianne just got one, who runs the makeup room back here. It's a hot vehicle in terms of sales, right? But it's not, I guess, helping the overall number.
It's also they haven't released a new vehicle, excluding the Cybertruck, which has had very limited production, and all of those vehicles over $100,000. The kind of expected, more affordable Tesla, which, you know, if you talked to me a year ago, we would have expected in 2025, has been kicked back to, a couple of years afterwards. Tesla is aiming to introduce some low-cost models, but I think just like anything Tesla, it's a moving target.
It's pretty low cost. You can get into a Model Y, I think, after all rebates are said and done, for about $34,000, which, it's not less than 30. I know that's where they want to go, but it's near as damn it to it. It's a problem, though, when the governor of California asks people, please not to charge your electric vehicles because the grid can't handle it, right? I mean, can we really get much bigger if we're already warning people not to charge?
I think it's going to continue to be, I think, a challenge for electric vehicles in this particular year. That being said, California's added a lot of battery storage, right? And if you look at how they're handling their grid, it's completely different than 3-4 years ago. Utilities have to get more, I think, structured. I'm more concerned about EV charging on the public side compared to the V2G element of it. But so goes California, so goes the nation. They've also had a stagnation there, around 25% EV share of sale in the first half of this year. That's pretty much where they were at the end of last year.
It's really high.
Yeah, it is high.
Are we seeing more chargers put in? I live in Scarsdale, and I've had problems with multiple EV charging stations, either broken or too full. It would make sense to me for every gas station owner to just put in a couple chargers, but they don't seem to be doing it.
There is a challenge with what's called demand charges, which is them pulling from the grid. It may theoretically sound like a great idea, but if you're adding for those grid upgrades and those additional costs, it might not be worth it for the gas station operator. I think the good news is a lot of the federal money hasn't been spent. I think there's been a misconception that, the $5 billion of the National EV Infrastructure Program has actually gone out. It's gone to states, and they have to actually begin to deploy those chargers. So it's still moving too slow. Matt, in terms of the consumer, they want to see a charging network that they feel comfortable with. And until you get to that point, you can hardly say that it's going well enough. You're also seeing this kind of NACS, North American Charging Standard transition, the Tesla supercharging network that has also been stymied by all the firings of that supercharging team. So it's messy and bumpy here in the U.S. I think in terms of good news, we can point at the Inflation Reduction Act investments beginning to actually come online and bear fruit, if we want to talk about that too.
Samantha writes in and says, is hybrid the way to go?
Ooh, okay. Well, hybrids have done well in the first half of this year. You're looking at Toyota even aiming to go at full hybrid. I think plug-in hybrids have maybe been overhyped in terms of the kind of focus and attention. That's when you have both the battery electric engine and the kind of gas engine. There's not too many models besides the Jeep Wrangler PHEV that does well. So wait and see. I think both BEV and hybrid are going to play a major role in the U.S. market going forward. I think with plug-in hybrids, you need them to get a lot better. I mean,
my wife had the Volvo XC90 T8 plug-in hybrid for 2 years.
Doesn't have any more?
That was a lease, and we got out of that lease, but she loved it because for the most part, she was just around town on electric power the whole time. In fact, in the first year that we had the car, she only filled it up with gas twice.
Yeah, that's pretty remarkable.
But is that like a niche use case? Or, I mean, I feel like there's a lot of suburban...
That's probably the idealized use case, right, of a smart PHEV driver. And I think when we've done our reports and analysis on PHEVs, just as you have the more savvy BEV drivers, battery electric vehicle drivers, to the more mass market, it doesn't mean that future PHEV drivers would drive that way. They might just say, oh, we're going to fill it up with gas because we're used to it with the hybrid experience. What we want to see more of is in China, the all-electric mode is about twice the volume-weighted average all-electric mode here in the US. So you want to see more of those kind of like Toyota PHEV range, 50 miles, 40 miles, less of this like 18, because then are you really going to fill it up on electric?
My favorite hybrid that I've test driven recently for my podcast, which is called Hot Pursuit.
Exactly.
You can download that on Bloomberg.com or wherever you
get
your
your podcasts, of course.
I drove the Corvette E-Ray.
Really?
Which has the 6.2-liter V8 behind you and an electric motor on the front axle. And that eliminates any kind of lag that you might get, like 0 to 10. So as a result, 655 horsepower, 0 to 60 in 2.5 seconds.
Wow, and how often do you need to do that, of course? Corey Cantor, thanks so much for joining us. Corey Cantor, lead U.S. electric vehicle analyst at BNEF. He's still talking, I'm not going there, but these guys can go out and talk about it all they want, but maybe I'll go hybrid at some point.
I think it's the way to go. I think it's the way forward for now until we deal with the grid and the charging issues.
All right.
Depends on your specific use case.
So you're not driving the Volvo anymore?
No, we switched over to, I wish we'd kept it. I'm a little bit disappointed.
All right, I'll have to figure that out.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We're here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to that internet thing, youtube.com, and search Bloomberg Podcast, and that's where you'll find us. We have a seasoned professional, like a trader, investor, like a person who does this stuff for a living in studio. Frank Monkam, Senior Portfolio Manager, Antimo, in our Bloomberg Interactive Broker Studio. Frank, what are you doing in this market? Where do you see opportunities today? I mean, I got the Feds going out to Wyoming or something, and they're going to have some economists out there.
Yeah.
How are you approaching this market these days?
Well, thanks, guys. First of all, thanks for having me on today.
You bet.
I think that the Fed here is probably getting everything it needs here to be able to pivot a little bit into the easing cycle. What we're looking at is just trying to be mindful of the volatility that's still plaguing markets here. I mean, we get into this Jackson Hole meeting at the end of the week with a Fed that's basically going to look at what's going on with financial conditions, right? Obviously, we know the September rate cut is now baked in, and for obvious reasons, inflation's come down. We've seen a deceleration in growth. We had a little bit of an NFP scare here, but we gotta remind ourselves that this market has been super volatile in terms of pricing. The easing cycle. We went from 7 cuts in the first quarter to about 3.5. I mean, it was 5.5 2 weeks ago. I think one thing I really want to watch is the Fed is really not going to, come out with anything real decisive as far as the pace of rate cuts between now and the end of the year. But it's mostly the tone with which they describe the current environment. So what I want to keep my eyes on really is what they're going to say about financial conditions easing and then potentially R-star, right? And it's really one of those things where, in terms of what we're seeing in the markets and how we should be positioning with this Fed meeting and also the DNC, right?
Yeah,
there's a couple of volatile catalysts that are on deck kind of this week. It's really to think about the fact that we're in a very illiquid, market right now. I was joking with friends over the weekend saying, liquidity has migrated away from capital markets into rosé and Chardonnay at this time of year. That's typical. So the NFP print for August is going to be very critical. My view in this market is that the way that we've seen the VIX kind of retrace so quickly, to me, is not really a sign of a healthy market. So I continue to want to be watchful of volatility ahead of us with the election cycle, with a geopolitical cycle. And I think with the VIX having collapsed basically from 65 to about sub 15 today, I think it's an opportunity to look for some downside protection again as we get into the fall.
Frank, you mentioned that sort of typical August liquidity problem that we've run into a million times before. Paul and I were talking about it before. Is that the main story of that correction we saw from the first half of August, that in the carry trade? Was there anything else more there, do you think? We're back almost to where we were before that really nasty sell-off.
Yeah, I think definitely. I mean, it had to do with it, but I also think that I've been on the record saying that, protection was really, really cheap. I thought volatility was cheap. I thought, skew was really cheap. It didn't materialize. It was short-lived, but it did materialize. But to your point, I think there's also the fact that the market is really overextended to the upside in terms of positioning, right? I mean, positioning was super overstretched, not just for the broader market, but also for, within the mega cap tech sector. And whenever you get to these levels, even with a bullish market, you're kind of due for a bit of a correction. And it's funny when a market is really overextended on technicals, which was the case because positioning is a technical indicator. All it takes is just one little technical glitch to happen for things to unravel. And I think that's what took place. In addition to obviously the JPY carry unwind. And also just, the SOM rule has been triggered for a lot of algos out there that trade around these types of signals. I mean, all these things kind of all happen at the same time and in a period of time where liquidity is very thin. So, I think it made a lot of sense for the market to pull back the way it did.
How about on the commodities? I mean, a lot of people just say buy gold and short everything else. What I mean, Mike McGlone, I'm quoting him.
Yeah, sure.
He's
our
internal guy.
Mike's a friend. It's hard to disagree with that, right?
Yep.
I mean, when you look at the commodities complex where we are right now, when you look at things like oil and copper, you're still getting a lot of mixed signals. Take the case of oil, for instance. We've stayed into this range on, let's use Brent as a benchmark, between $75 and $90 a barrel, and you can clearly see that it's a range that's been basically kept intact because you've got offsetting catalysts. So it's a market that's really hard to read. On the one side, you don't really want to short it because there's a secular shortage of investment in crude and all that stuff. But it's cyclical is really fairly bearish, to be honest with you. And OPEC now, the OPEC put to me is getting softer and softer and moving lower and lower. I think the Saudis need cash. I mean, there's a little bit of a fiscal distress in Saudis right now. I mean, they've only run a fiscal surplus, one out of the last 10 years says a lot. So for them now, it's no longer trying to fight, the flat price as much as they used to. But when we look at a market like gold, it's really all stars, being aligned. I think there's additional momentum here with central banks continue to buy. The Chinese, I'm hearing, are kind of looking for a little bit of a pullback, 10 to 15% to probably add more. The PBOC, that is, which is the main buyer in this market. So gold looks really, really good. The only thing there, it's slightly overextended to the upside, but there could be momentum there. So I think the strategy really in commodities is I would want to ride this momentum and potentially keep some dry powder on the side to add on dips, and also just continue to look for relative value dislocations within commodities. Oil versus gold, as in bullish. Gold, kind of bearish oil, these kind of RV plays, and gold versus copper also. Yeah, so I think oil gold here is the main game in town, and the way to play really is to perhaps look for dips and look for RV plays versus other commodities.
Yeah, Frank, to get back to the Fed for a minute, I'm looking at our world interest rate probability function. It basically just susses out how many interest rate cuts the Fed funds futures traders are expecting. Yes. It's looking at like 3.5, maybe almost 4 cuts.
Yeah, 3.8 as of this morning, yeah.
Yeah, by the end of, and we only have 3 meetings coming up, so that's even people are thinking we'll get a 50 basis points at one of them, I guess. But what's the risk there? I mean, is the market in Fed funds futures just bracing for more bad eco news, and is there a risk one way or the other that they'll get this wrong?
Yeah, I thought 5.5 cuts 2 weeks ago was overstretched. In fact, we kind of took the other side of that, which has worked out so far. I mean, we're down to 3.8. That's roughly almost 4 cuts between now and the end of the year. I think the real wager here is around the August jobs data, right? If we were to break the 100K jobs, Mark, and the unemployment rate to tick up maybe to 4.4% or 4.5%. And I think, there's a chance that we could get a 50 basis point cut in September. And I think what the market is really getting at here is that if we get 50 in September, we're probably going to get 50 on the next one, because the Fed then realizes that maybe it's a little bit behind the curve. So I think this whole wager is around this August NFP, which my view on that is based on the seasonality of the data. I think the July print could easily have been a bit of an outlier here because of seasonality.
Right.
So
there's that hurricane in Houston too.
Correct.
Yeah.
Correct. And then some of the heat waves. There's been a lot of activities being canceled during the summer because of heat waves in a couple of states. So that's all playing into that. So I think it's one of those things where it could be kind of almost binary, where we either get the 50-50-25, which gets you to the what WIRP is pricing right now, or we might even get to a point where we only get 1 or 2 cuts, right? It could be one of those things where it's kind of, if we realize July was a blip, then we might get a one and done. Where the Fed just makes an adjustment cuts, because I think this thing is super telegraphed. They can't really backtrack on the September cut. I think it'll spook markets, which is not what the Fed wants to do. So I think it might just deliver a 25 and kind of wait and see post-election. If we get a strong or decent NFP, in early September.
So no taking off on the Friday's payroll day.
No, I'm in. I'm in, baby.
No.
All right.
No summer Friday. Summer Fridays are over. Is that what I'm hearing, Frank?
For me, yeah. All right, Frank, thanks so much for joining us. Frank Monkam, he's a senior portfolio manager in Antimo. If this whole money management thing doesn't work out for you, you get a voice for radio. I mean, that's incredible. I just told my producer, let's get this guy in. Okay. Frank Monkam, senior portfolio manager in Antimo, in our Bloomberg Interactive Broker studio. We appreciate getting some of his time.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Paul Sweeney here, and Michael Regan sitting in for Alex Steele today. Estee Lauder, EL is a ticker symbol. Stock's down like 35% year to date. Turnaround, change in management. Red Brown joins us, earnings reporter for Bloomberg News. Red, what's going on with Estee Lauder?
Yeah, I think today, the highest level is just like, this is a clean slate, I think, for this company. We saw, obviously, CEO stepping away at the end of this year. CFO is also leaving around the same time. So, new management team. And also, if we look at the guidance that they gave out for their fiscal 2025 today, it came in much lower than what analysts were expecting. Analysts were expecting to see constant currency growth. They were expecting to see earnings about a whole $1 higher than what the company guided for. So again, just kind of setting a low bar for this company going forward, clean slate, and let's go from here, I think is kind of the message that they're going to be trying to change the narrative to going forward.
Red, how big of a deal is China to Estee Lauder? I know they have a pretty decent-sized business there. Was that part of the sort of disappointing results this quarter?
Yeah, I mean, I think that is the main culprit of the issues that they're going through. I mean, we've seen throughout this earnings season, a lot of these companies, especially in the luxury space that have tied their fortunes to China, are paying the price of that at the moment. So China came in really soft again this quarter. Analysts were expecting for around 3 or 4% growth in the Asia region, which is dominated by China, obviously, and what they saw was a 4% contraction in that market. So again, paying the price for the investment in that region as China sales demand for these luxury products, whether it's LVMH's goods or fashion, anything like that, and then also skincare, fragrance, things like that are also weak as the demand wavers there.
Just reading some of the reporting on this here, the company in midst of a turnaround. I'm not sure necessarily what it has to be turned around, but the stock's down 35%. So that tells me that year to date. So that tells me whatever they're doing ain't working. So when you get presumably a new management team coming in, do they want somebody from inside or maybe some fresh set of eyes coming from the outside? What's the thinking there?
I think both the CEO, CFO have been there for over a decade now. So I mean, it's always good to have somebody within the company, knows the company. But it might be time for some fresh eyes. The company has missed guidance or cut guidance several times over the last few years. Analysts start to get, when that happens, analysts start to feel, they start to lose confidence in that management group's ability to understand or grapple with the business dynamics at the moment. So I think there could be some calls for an outside look. The company says they're already undertaking the next CEO search. obviously are going to say they're considering internal and external candidates, but yeah, definitely might be time for a fresh look.
Yeah, I'm smirking here a little bit, looking back on a story we had out in February on Estee Lauder, where CEO Fabrizio Freda said, "I'm not going anywhere." So
very prescient. Yep.
But Red, I don't know how much of an expert you are on the beauty care market and skincare, but are they an outlier here as far as you go through 1 million earnings reports every quarter? Are they an outlier as far as that consumer discretionary space? Or are we seeing similar stories from other, companies that depend on, I don't know, whether it's beauty care or, high fashion? Is there a theme here?
I don't know what gave it away that I'm not an expert in the beauty space, but
you do have good skin. I'll say.
No, I don't think they're an outlier. Look, I think you see something, for me, the similar trend that I'm picking up across all of the retail, even something as far away as Home Depot, is that people are focused on needs, not wants, and this luxury space, skincare especially, is a want. It's not a need. Fragrance is a want, not a need. So consumers are cutting back where they can, whether it's fixing your house up or making yourself appear a little bit better. It doesn't matter. That's kind of the macro pressure is going to win out in this scenario.
But as our good friend Samantha writes in, Alex Steele has always told us that you have to invest in your face, which she does. And John Tucker and I do not. So, I mean, and we can tell.
Clearly my face is a value stock at this point
exactly.
right now.
But all I know is during the lockdown, across the street, the Sephora store is packed.
Yeah,
I mean, no matter what, people need to get that stuff.
Yeah, I mean, I guess in the pandemic, people had a few extra bucks they weren't spending on concerts and movies.
It shocked me how strong that category is.
Yeah.
And then right after the pandemic as well, they did really well because people were like, I'm emerging from the world. I want to make sure I look okay. I haven't shaved my face in 6 months. I might as well get a moisturizer or something. But yeah, it's those trends have just fallen off now, and they haven't really returned to like pre-pandemic levels of growth. Estee Lauder was a company that was like really flying into the pandemic and through the pandemic, and then just the fall off of China, and then the United States as well is kind of not getting a lot of attention at the moment, but like U.S. sales contracted as well this quarter. It's maybe hidden because there's been so much emphasis on China, but those are their two biggest markets, and both are underperforming, I think, at the moment. So
it still seems like China's consumer economy is a bit of a black box to analysts. Do you find a lot of surprises, either upside or downside, on companies as far as their business in China goes?
Yeah, it's hard to get a read because if you think like there was so much worry, and again, jumping around here, but I just connecting all the different kind of earnings threads, like there was so much worry going into Apple's report of like, where's the Chinese consumer? Are they buying iPhones? Things like that. It's the same dollar that's going towards these things. But yeah, it's really hard to get a read because Apple outperforms, Estee Lauder underperforms. It is just a kind of, most of the analysts they sit here in New York, they're just looking at data points. So it is kind of a tough read.
And looking at the stock of Estee Lauder, looking at the chart here, it peaked at about $370 literally on the last trading day of 2021, down 75% since then.
Wow.
From 370 to here we are at 94, so a big move here. And I guess the next, NVIDIA is coming up. That's still not for another week or so, right? I think.
Yeah, that's next Wednesday.
I mean, they're so late in the earnings cycle. I don't know why. I'm sure there's a story there. But, man, it feels like the market's going to be hanging on that one. Are the expectations as high as they always have been for NVIDIA?
Yeah, they will, of course. They will be flying extremely high into that report. And then if we think kind of about the AI story of this earnings season is that people have been maybe investing a little bit too much. We're not seeing the growth that we would have liked out of those investments. But of course, NVIDIA is on the other side of that. They're the ones receiving a lot of that investment. So could be, again, kind of the outperformer of that group. But yeah, definitely very high expectations. And yeah, with high expectations, there's high risk as well.
Yeah, anything else on your radar, Red, that you're looking for? We're in that kind of weird period for earnings where you only get the stragglers. Is there anyone else we should really keep an eye on?
Yeah, I mean, it's continue with the retail stocks over the next week, especially. I'm just trying to think. There's like 1,000 names running through my mind now.
But the retailers, they tend to come late in the cycle. Yeah. But it's going to be good read on the consumer, and then again, as you mentioned, that the and Nvidia coming up is just going to be huge, not just for like Nvidia itself or the tech stocks in general, but I think the market overall.
Yeah, it really seems like it's the will show us the money phase of the AI craze right now. So
Yep.
and Nvidia might be the outlier there, but
all right, well, we'll stay on top of
else.
it. Well, I'm sure we'll be talking to you, Red Brown, earnings reporter, Bloomberg News, joining us live here in our Bloomberg Interactive Brokers studio here.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.